You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, it's time to do this thing. It's time to talk about a little bit of volatility. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get at us on your platform of choice. Search for, subscribe to Vol Views. If you're smart, you grab our full network feed that gets you everything. All of the shows, about a dozen or so. Somewhere in that neighborhood, I lose track of all the programs coming at you. And, of course, you can join us live every Friday, noon Central, 1 p.m. Eastern, via the old Mixlers, MIXLR. That's where you can get us over there as well. And, of course, however you listen, live after the fact, make sure you come in and you send us your questions, your comments, you vote in our polls, all the other fun stuff that we have going on over there. And speaking of the show today, let's see who we got joining us today. I'm getting behind the scenes chats here, listeners that are distracting me. Let's see who we got. We got the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, how you doing, sir? How are things in your neck of the woods?
It's good, but it's raining on our snow, which we don't like.
Raining on your snow. Well, yeah, you don't move to Maine to have rain, right? You move there to have frozen, just icy wastelands as far as the eye can see. You want tundra, basically, frozen tundra.
I want snow, because rain on snow just makes, and then it's going to freeze tonight, and it makes everything hell. So it's like everything is a giant ice rink. So it's quite frightening, to be honest.
Well, there you go. How's your ice rink doing?
Remember, there was no ice rink this year because they didn't get it leveled.
So that's right. That's right.
The other end, by like mid-February now, it's dicey for it's a little dicey for ice rinks. So I've been using other ponds.
How will your children survive without a custom-made ice rink to pass the time in the hinterlands of Maine, sir?
They switched to snowboarding, and I made a snowboard park in the other side of the yard.
Well, there you go. There you go. It's good to be a baby Rock Lobster. All right, with the team assembled, let's dive right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
right, everybody. Welcome to the Vol Review, the portion of the show where we do what the name implies. We review some volatility, and oh, what a week we got cooking over here. Listen, it's been kind of a weird one, quite frankly. You know, we've had some interesting stuff afoot out here as we're coming into showtime. You know, first off, beginning of the week, it seemed like we were in rally ho mode. Then we kind of getting into some mixed territory, selling off a little bit yesterday, then kind of rallying, doing away with much of that sell-off towards the end of the session. And then today, it seems like the bulls firmly back in charge again. Green back on the screen. We've got most of the major indices up, strong upsize there on the old network. Sorry, I'm getting some behind-the-scenes notes here, listeners, that are just playing with all sorts of fun stuff going on here. Let's boost me there. How's that? All sorts of settings going on here, listeners, that people don't see behind the scenes for the fun. Let me turn that up a little bit, too. And let me go out here to the main. Let me turn that up a little bit, too. And my levels there. How's that? How's that for people behind the scenes? All right, there we go. Dueling levels going on here, listeners, which is all sorts of fun. All right, where was I? Yes, VIX. All things VIX, all things market. We are seeing quite the rally ho pretty much today out there on the street. Most of the major indices are firmly in the green. S&P, actually, no, NASDAQ is kind of the laggard today, up not even 0.5%, a paltry 0.4%. How dare they? And then S&P up over 0.75% right now, and the Dow leading the charts to the upside. It's a little bit of old school, taking the reins back from the NASDAQ today, up nearly 1.5 at 1.4% out there on the day. And of course, all that green on the screen means, listeners, that we're going to get a little bit of downside out there in ye old VIX Cash land to the tune of, actually right now, at this moment, 15 even, listeners, which I do believe, yeah, looking here, yeah, we were both actually surprising a little bit higher last week. I was at 17.25, and I think I talked Mr. Meatball into going up a little bit higher too, because he went up to 16.25, and now here we are, off 1.25 to pretty much exactly 15 right now. So he was thinking he's going to come on the show this week and gloat with a bullseye, but if he was back from 2 weeks ago, and then he would have been correct. But 15.25, he bumped it up, and now he's feeling the pain this week. As am I. I'm off about 2 handles this week, so can't be a bullseye every week, listeners. And then, of course, our old friend VVIX, a.k.a. the volatility of VIX, listeners, hovering not quite at the low end of that range, but pretty close to it. Remember, we talked last week about how it threatened the 75 level. Well, this week, a little bit north of that, about 80, almost 81, still off a handle on the weekend, or at least off a handle today, and looks like about 7.5 handles lower than where it was this time last week. So the volatility of volatility coming in a bit. Of course, last week we saw a nice low. We saw it dip to 45. So right around 76.5, which we've said many times on the show. 75 seems to be the near-term bottom of that range in VVIX. It's kind of hard to push and fight really below that. And that's kind of what we saw over the last couple of weeks as well. Let's see what the Rock Lobster saw. He only has one eye, but he can still see a lot with that one eye. Mr. Rock Lobster, what caught your eye this week in the volatility space, sir?
Just to correct you, I have 2 eyes, but only one is functional.
Ah, okay, that's correct. Well, so I meant in the functional sense.
People think I'm walking around with a hole in my head.
You can have a cool pirate look going. You can have a cool Nick Fury eye patch going. I mean, there's a cool look for that. I was kind of setting you up a little bit of hint of danger, a little bit of mystique.
Yeah. Just don't call me, what is it, Carlos Danger. Wasn't that what's his name?
Carlos Danger. I do not know what you speak of. Your reference from 1932 eludes me.
That was the handle for that congressman, that congressman that had the issues, that New York congressman. I can't remember what his name was, but anyway, let's just let that all die. When was the last time VIX was in the 14 handle?
It's been a while. This is where we need to turn to Dr. VIX and see if he has his historical data, but he's not here.
I posit that, and I'm going to say September. I'm going to say September was the last time we had the 14 handle, but I could be wrong, and Nope. The last time is somewhere in September. So it has been actually where we are right now. It has not been that low since we had that vol-apocalypse. We actually are, that number is, that's the 16 handle. We have not, somewhere in September. That was our last 14 handle in VIX. Quite a ways ago, right before the that big vol pop. So it has been 4 months. So is this significant? Why is this significant? Well, generally volatility prices a level, whether it's the VIX for the broad market or you're trading Apple or PayPal or Tyson Foods or any of those things. And right now they are putting in a new low since everybody got worried about all those tariffs and stuff. So between the Fed helping out, earnings are out. They were not awesome, but they weren't as bad as everybody thought. And it looks like they are coming to some sort of compromise in the trade area. At least that's what Munchin said this morning. So 14 VIX, and lows for VIX were around 11, 12 prior to that, when the SPX was 2,900. So you could see, not saying we're going to see, but you could see some lower VIX numbers and higher index numbers if the trade deal comes through. So that is, in my blogs this week, that's basically what I said, and it is coming to pass, as well as just the way we structure stuff in our vol newsletter and stuff. So there's some, if the trade deal stuff happens and moves forward, we'll probably be over 2,800 again. If everybody gets grumpy and it doesn't happen, 2,600 again. So something looking like that would be my guess. If it drags off, that could be an easy run back to 2,600. So I think that's kind of what we're looking at, and that is sort of, I guess, the vol deal. So we'll wonder. I mean, this weekend, and we're into the end of March. All of those things look. I think that's just how it sets up.
Yeah, that does still seem to be the 800-pound gorilla, the elephant. Choose your analogy. In the room, there's the trade deal. Every week, there's whispers, there's hints. It's better than we thought. It's worse than we thought. Oh, maybe we'll let that March 1st deadline slide a little bit, right? It was more of a suggestion than a deadline. Oh no, we're gonna stay to it. We're gonna go after Europe as well. There's been all sorts of weird vacillations on that front. Hence our weird vacillations in the volatility space, because you're right. Earnings season, most of the big names have already reported at this point, so their factor as a big driver of volatility, probably most of that is behind us. We'll get to some of those, how they performed in a little bit, listeners. But so really the trade war is kind of the big lurking 800-pound gorilla, and whether hopefully we'll have more insight into that in the coming weeks. Obviously, we have the specter of perhaps another shutdown looming, and we saw the combo of that last year and the impact that could have. But, a lot of that impact really was driven by the trade war. Some of it got conflated in with the shutdown as well. It was kind of a weird, aberrant scenario. We haven't really had a scenario like that in the past, where we had a trade war with a major trading partner and a government shutdown at the same time. Two rather outlier events happening at the same time. So we'll see if we can keep the shutdown at bay, and also maybe keep the trade war at bay. And if those two things happen, I don't know, Mr. Rock Lobster, you feeling a little bit of joy? You feeling a little bit of Uncle Mike Tusaw-esque bullishness ahead if those two things come to pass?
A little bit. So we've been looking, at least from a vol point of view, like 12 or 20. That's it. 12 or 20, 12 or 20, 12 or 20, or 2,800 plus. And it could be in a little Tusaw Nirvana type situation. Certainly possible.
You've always been known for your Nirvana-esque looking. I always turn to you for you're my Pollyanna guy. If I need a ray of sunshine in my life, who do I go to but the Rock Lobster, correct?
Correct. Exactly. Exactly. There you go.
Let's see what else is popping off here. Going on to middle, actually not even middle, but only about 20 minutes in to Showtime. Let's see what else we got. We talk a lot about our old friend, the VIX futures curve. Let's see how it's shaping up. Just a tick under 15 right now, 14.98 out there in the cash and the futures. And we've been talking for a while about these weird kind of vacillations and kind of how weirdly flat it was. We've seen a little bit of a return to some shapeliness out there in the VIX futures curve. We have about not quite 1.5 handles, about 1.4 point premium of the front month future, which is, of course, the March future right now to the cash. Remember, for a while there, the cash was at a bit of a premium. The futures are at a discount as the cash was vacillating wildly. Not quite there anymore. VVIX, remember, coming back in a little bit. And then the 2 months out, so going out to April, we see not quite 2 points, about 1.8 points in terms of premium of the futures to the cash. Anything catching your eye out there in VIX futures term structure land, Mr. Rock Lobster?
What is catching is we haven't had this much premium in ages. Again, since September. However, it's still, I think, historically light because we have like a fair value kind of for time to expiration in VIX, and what we have is like an observed curve. So if you took a gajillion samples of VIX, it kind of settles into a thing or settles into an area. And it's still, I would say the premium is a little bit light given where VIX Cash is. Not a ton, but it's $0.50 for VXXB and UVXY and all that other stuff. It's significant. But the market is still looking, I would say, for a little bit more cash compression. So that's the way it looks like it's setting up at this point. So we do have some premium. Historically, that means what VXX, like in its last year of its history, which I find the irony of all ironies, was up on the year. I think it was the only year that it ever did that it actually ended the year higher than it began, was the last year of its existence. The only problem is the other 99% of its value that went to zero. But the last year it put in a big move. Generally, when you have like high vol the year before, the next year is generally a year of less volatility. So trades like longer term trades like VXXB puts, you remember those 1 year outputs, now there's 2020s again. So there's that kind of stuff starts looking interesting again, because so when you have, just for the listeners, when you have 2 months of front month premium with 30 days to go, that will generate decay of around 12 to 14 cents a day in the VIX futures. So you have that number, and all of a sudden it's like that could be 50 to 65 cents a week, and then now you go, because that's for a product like VXXB. Now that kind of number could get quite high, like $2-3 a month for VXXB. Right now it's trading $33. You do that times 12 months, and VXXB by the end of the year theoretically is $0. So when you have this contango back, it brings in an entire new part of the VXXB trade or the UVXY trade. The short vol trade comes back big because you have the massive contango. Of course, I think you still have to hedge it a little bit, but there are all kinds of clever ways to do that. But that sort of potential now is back. It's back. It hasn't been here in 4 or 5 months, but it is back now. So it makes very interesting trade, and it's got some of my Vol newsletter subscribers like, oh my gosh, we haven't seen the erosion trade come back. So it is possible. I would say I was just looking at my little theoretical generator. Maybe I should send you one of these Tusaw. Or not Tusaw.
Umbrage.
You might
Umbrage.
Like this. I know. You know what? That's for calling me the meatball for the last 4 shows in a row.
Yeah, but you two are at least similar. Me and Tusaw are about as polar opposite as you can get.
Okay. How am I similar to the meatball.
You have the same email address pretty much. So there you go.
Okay. Anyways, that's funny. All right. So anyway, yes, I will send you. Actually, I'll just drop it in Skype. Are you running? I guess I can't say. I'll post it here.
Yes, you can send me that, and I will take a look at it. I'm not sure if I will have time to parse it during the show.
No, you can't do it right now. But right now, yeah. So you could say 15 up to 20 cents per day in decay. We're getting very close to that now. Once VXX and I say 20 cents per day, that's the magic number for me because that's $4 a month in VXXB in decay, which is a huge amount. It's very hard for the vol futures to even rally when there's that much potential decay, just because there's so much, there's so much premium built into the future once VIX Cash starts going down. So it's a ripe time for the product. So it is getting in there, like full disclosure among VXXB puts and stuff like that, and our funds and things like that. So it is a interesting time. And the way I look at it is, you trade the erosion, but you hedge the explosion, so to speak. And right now, I think the erosion pays a lot better than the explosion. So that is at least how I think the vol is setting up at this point. And also, think about what happens to SPX if we do a trade deal. Like, are we up on 1%, 1.5%, boom, bing, bang in one day? I think that happens quite easily. So you've got like this potential of the market ripping and them crushing vol at the same time. So, of course, that's a trade you can structure as well. So there's opportunity. You might have to sit around for it till after March 1st, but that's the way I seize it.
I like that. Trade the erosion, hedge the explosion. That's a good, succinct way to sum up pretty much VXX in a nutshell.
Pretty much.
People always write to us, and ask the thing, and we always say, well, you got to, be biased to the downside, but you have to prepare. You have to manage your table stakes against those upside explosions and things like that. But your way is very succinct. I may make that the title of the show. How's that sound for rewarding you with a little bit of your pithy wisdom?
I think that's it. It's almost like I write a volatility premium blog for my subscribers every day. It's almost like I do that when I can come up with stuff that's. It's
amazing you can do all that.
That clever
with a fancy pirate eye patch going. I mean that doesn't cramp your style at all. So that's very impressive, sir.
So would it be like an Apple eye patch?
That
like
would be,
eye patch.
I'm sure they have one coming down the road. It does fit with their branding, and they like to be with the cool one-eyed hipsters. That's kind of Apple's market in a nutshell, right? So
it would be kind of that white sort of off-white in the Apple Store color for their eye patch.
Yeah, that would be a little ugly. You might have to tweak the colors a little bit. You got to pay for the premium red one at least to get a little cool.
Exactly. I do like the black one though. It's a lot more. The black one is definitely, it's a little more mysterious.
You got to go black. You got to go skull and crossbones. You got to go legit. You got to go old school pirate, or maybe a more new school Nick Fury kind of look. By the way, I think you could pull it off, Mr. Rocklop. So I'll send you some. I'll send you some ideas after the show there for your pirate mystique. Meanwhile, let's see what's going on. Forget the mystique in the real, actual nitty-gritty world of VIX options trading. We got a little bit north of 250,000 contracts on the tape right now, about 264,000. That's a little bit more than half of the ADV right now, which is shy of 500,000, about 476,000 contracts. Just give you some frame of reference for how that ADV is looking. We are actually down about 20,000. We were flirting with 500,000 last week, so the ADV has come off, despite the fact that we've seen a little bit of movement out there. Like we said before, the vol product's not exactly trading it up all the time. But let's see what has been trading. What are the big positions? Obviously, we've seen some contracts come off the board here of late, so the top spot's a little bit lighter than usual. So let's start from the bottom again. Let's start with number 10. We got the March 40s, $1.53 open on that strike. Number 9, the APE 37 halves with 159,000 contracts open. We talked about that one before. Number 8, the March 14 puts, about $1.61 open there. Number 7, the Ape 70s, our old friend, the Ape 70s, 165,000 contracts open there. When we got here, number 6, the March 37.5. So 37.5 is getting some love across the board here. 173,000 contracts. Number 5, the March 15 puts. Looks like an interesting strike selection. This time about $1.80 open on that strike. Number 4, our old friend, the 30s. This time in March, the March 30s, 182,000 contracts. Number 3, the March 20s, the comparatively reasonable March 20s, 187,000 contracts open there. Number dose here. May, going out to May, the May 37.5. So we got just a strip of 37.5s across the board. March, April, and May. 215,000 of the May kind. And rounding out the top 10 here with a comparatively light 226,000 contracts. It's the Ape 45s. Interesting strike selection here. Interesting contracts here. Again, 226,000, not even 250,000. That's pretty light for the top of the VIX heap. Again, showing how we've had some contracts coming off the board. OI also pretty light, about 6.25 million contracts. We're at about 4.9 on the calls and about 1.35 million on the puts. Mr. Rock Lobster, does that surprise you? We see so many pretty far upside calls dominating the remaining top 10 out here in VIX land. And anything in particular catching your eye out there these days?
Mostly just all of a sudden there's action in puts again. Just looking in general, seeing more action in VIX puts and VXXB puts. So we haven't seen that in a bit. But there it is. It's starting to come back. It's starting to come back into vogue, let's say, where that short-term VXXB put is becoming an interesting thing, like the 1-week VXXB puts, right? If you're decaying at 75 cents a week, all of a sudden that 33 put doesn't look very expensive for 90 cents. Like just the decay gets you to the bottom. So VIX actually goes down, you get an easy ride. So I am seeing more of that volume. I'm also seeing the implied volatility compressing. It's like the March 01 IV and VXXB is down to 47%. You already mentioned VVIX. So like vol that low in the vol products, it's not usually very bullish for volatility. We could have a surprise at any time. But as far as, those are all generally bullish market signals and bearish volatility signals.
Let's see what other signals we got cooking out here this week. Let's see what's trading out here a little bit. Hasn't been, like I said, hasn't been a bonanza out here. Let's just see really quickly maybe if some new prints have come in since the start of the show in VIX land. Nope, the biggest trade of the day still are these Ape 16 puts going up for $1.30, splitting the uprights as they are wont to do in VIX land, 19,500 times. These things were $1.25 at $1.35. They went up late too, so that execution is probably a little bit dubious. We don't know where the actual print was when these things, or the spread was when these things actually printed. Also seeing, not quite marked as a spread, but about 3 minutes later, more puts, this time the March 16 puts. So 16 puts a month adjacent, going up 3 minutes later, not marked as spread, but perhaps related paper. These are the March 16 puts for 105, hitting the bid 18,250 times. So the size doesn't line up, the time doesn't exactly line up, but it does seem like it has the whiff of related paper. So maybe taking a March position and rolling it out to April, maybe. In this case, maybe they went up late, so who knows what the heck's going on behind the scenes with these executions. Maybe they're legging it a little bit, taking a little bit of leg risk there, or it could be completely unrelated, but it doesn't have that whiff about it to me. Also saw where we got here, the March 21, April 25 diagonal, actually, going up, paper buying that nearly 8,000 times for 9 cents. That's pretty much the biggest spread trade of the day. So that'll show you what was lighting it up today. Yesterday on Thursday, what do we have? The March 18s 5,500 of those going up for a $1.30, lifting the offer there. Also seeing, yeah, this was a spread actually, 1x2, the March 17s going up for not quite 1x2, a little bit less than that, but for a $1.60, March 17s going up. Yeah, so 10,000 of the March 17s for a $1.60, and then against 5,500 of the March 18s for $1.30. So it looks like they bought the 17s and are selling. Actually, no, it looks like the 18s are going up on the offer as well. So they could have just bought a strip 2x1. All sorts of weirdness going on with that one. Yes, it's like also we have a bit of another that calendar going up yesterday as well. At March 21, 825, about 8,000 times. Paper trading that for looks like about 6 cents as well. So similar paper yesterday and today. Looks like maybe that March. I'm sorry, that March. Oh, they quote it here as a risk reversal, 10,000 by 5,000 times. Sold for 55 cents. I don't know. It's not really a risk reversal if it's 17 and 18 calls, but maybe call that what you. I don't know how they get 55 cents to. I don't think that's exactly what they're quoting. But weird stuff, Mr. Rock Lobster. Any of this paper resonating to you? Anything else catching your eye out there in VIX options land these days? How about that weird 2x1 doing? What were the strikes there? Let me just pull it up really quickly. It was March 17, 18 yesterday. 10,000 of the 17 calls by 5,500 of the 18 calls. Do you like it that way?
That is just, are they trying to build like a cheap upside back spread? It's kind of a weird, you know.
They do. You think you want it the other way, though? You want dose of the 18s, not dose of the 17s.
I don't get it. So, I don't weird, right? Maybe they had to buy some puts against it. Is that possible? I just don't see that as a. You know what? I have to be honest with you. Sometimes, and I know this is a total shock to you, but I really don't get what people are doing when they put these trades up, because we bang our heads against the wall and say, "How does this make money? You know, how does that trade make money?" I guess if you wanted to alleviate some of the risk on the 17s, but then you got to pay up for the 18s. It's kind of it's a hard one. It's a hard trade.
You got a ton of VIX futures. You want to overwrite the hell out of them, but then you're worried that it pops. So you get you go 2x1 on the calls, but then you pick up an extra call leg to the upside just in case it explodes, right? So then you're long more again to the upside. I don't know. That doesn't. You get
to ring the cash register that way. I
guess. I don't know. We have to just assume they have that magical other leg on that explains it all and makes the trade make a lot of money. You know, they did this mystical leg in the OTC world that makes it all make sense. Because you're right, on the options side, bit of a head scratcher as to why you'd want to go that route. I think if you polled most of our audience right now, if they want to have just that spread by itself, first off, one handle wide, why even bothering with a one handle wide 1x2, or in this case 2x1? You got to give that a little bit room to run, but not a ton. Yeah, I think 3 to 5 points is a good range for that, but still, I digress. If you had polled most of our audience which way they want to have that on, they want to have 2x1 or 1x2. I think they would go the other way. 1x2, selling 1, buying 2, of course, is what I mean. Those, of course, look like they went up both on the offer. So all sorts of funky mystery. Maybe they just wanted a healthy dose of upside. They didn't care where they got it. They spread it across both strikes. That could certainly be it as well. But the size, kind of weird. Speaking of weird, let's see what's going on out there in VXX. VXXB is just weird. Have you gotten used to saying VXXB yet, Rock Lobster?
No,
I have not.
I hate it. I misquote everything when I write up all my.
I do the same thing. Whenever I'm researching it, whenever I type it into any platform, I always type VXX and I get it kicked back to me, and I go, "What the?" And I have that minute of "What the hell?" Then I say, "Oh yeah, I have to add the B," and it just drives me crazy. It's like, can't they at least update their platforms to go to that directly for me? They're gonna make me do that every time. So yeah, I have that problem about 5 times a week. Wait, what happened? Oh yeah, I typed it wrong.
Can they change the name already? Like VXX, I guess there's still is there. I don't even know if there. I can't even imagine there's any legacy VXX anymore. So, like, why don't they just change it now? Just say, okay, the charade is over. It's VXX now. Like, come on. But it's that. I guess that's just a small. It's just a little. It's a small aggravation in the in the world of VXXB.
Yeah, you can't have anything left linked to VXX because it's gone. There's nothing.
It's dead,
there's
right?
nothing to it.
That's
so
what I
I don't
thought.
know how you could have anything left to it. If you
I
did,
thought all the Jans were it.
if you did, you're kind of exposed on one leg. I'm going to assume right now.
Yeah, see, they're like, well, you ask somebody to say, well, wait a minute, how long a put? When do I get the money? Well, I don't know. There's no underlying left anymore, so I own a call. No, it's gone. It's gone. It's all gone. It's history. It had a remarkable life. How about that? Leading a life of futility. That product is the real Sisyphus.
Leading a life of futility until last year. It went out. It went out like a lion. It roared back to life and probably inevitably damaged a lot of our audience in the process.
Right, probably 50% return, right? That was the printed the end of it for 2018. I think it was a 50%. So I remember the Thompson boys. Okay, everybody, news alert: VXX up on the year. So, I think it would have a hard time being up on the year twice, because that would be an enormous amount of premium to be put back in the futures. It could happen because you remember 2 years ago? I know this was a long time ago, but you and I laughed and we said, "There's no way that Donald Trump is a single-digit VIX president."
Yeah,
right?
everyone said that. Everyone said that. Look how wrong we were.
And then literally everything turned around.
He just had to get his sea legs. He had to get his sea legs under him. Then he was good, right?
Exactly. And now it's probably, if any historical norm, probably somewhere in the middle. So, but I'm looking at now. VXXB is becoming more liquid. It's becoming a little bit more like a normal stock. The open interest is up there. I mean, even today, you're seeing volume on the 32.5 puts expiring today. You don't normally see that. There is some closing purchasing. So there's a possibility that they just drop the hammer on the ball here, because even going into the weekend, they're down. It's down. Volatility is down 125. So you could see, a pretty good markdown on the futures if somebody decides to kill VIX ahead of time. I don't think it's going to happen, but it is becoming what I would say is a fairly liquid product. I mean, the markets they're not as liquid yet as VXX was. Even then, VXX got some crazy close markets, but you got a dime nickel wide now. So it's not exactly a trading zone is like Apple, but I'm sure it will be there again.
Don't say that to our boy F Contango Trader. He's no fan at all of the markets right now, and he's not shy about letting us know it on a multi-time per day basis that he expects much tighter markets out there going forward out there. Let's see what we got out there. Let's see what was lighting it up out here this week in our old friend, yes, VXXB. I'm going to say it, even though it doesn't really roll off the tongue at all. 32.5 right now, coming into halfway through or so the show, about 2.5 points lower than where we were last week. Today we saw about 93,000 contracts on the tape coming in. We had about ADV of right around 111,000. Let's see if that number has popped up a little bit. Oh, we actually got 114,000 on the tape right now, actually. So it's popped up a little bit, getting a little bit of life. So that ADV looks like it's going to be creeping back up out there today. Let's see what are the big positions before we get into what's trading. And let's see here. Let's go back from the bottom again. June 80s, number 10. Got a good strip of calls here in VXXB, Mr. Rock Lobster, which has been a while since I think we could really say that. Certainly with our old friend, the legacy VXX, not so much. Number 10, June 80s, 16,000 on the tape. I got VIX numbers on the brain. Number 9, March 39s. These are expiring on the 1st, so these are the weeklies. 161,000 of those. Number 8, the June 40s, 164,000. Number 7, the Feb 40s, 170,000. Our first put has to come at number 6. The Feb 32 halves, 17,285. So all those numbers, dial them back by a decimal point there. And number 5, the March 40s, 17,430. Number 4, the March 70s. Yes, the March 70s, about 25,000 open there. Number 3, the March 43s, 28, almost 29,000. Number 2, the March 45s, 31,000. And the number 1 spot, that's the only other place you find a put, Mr. Rock Lobster. It's the Feb 33s. So the 33s and the 32 halves, the two pretty much at the money puts. They're kind of vacillating for that at the money spot right now. 32,400 of those bad boys. Decent OI, 12,000 of them trading yesterday. There's going to be more going up again today. 9,000 going up of the Feb 32 halves, at least in terms of increasing OI yesterday. So those two strikes pretty active. Let's see what's on the tape for today, Mr. Rock Lobster. Yeah, still calls. Still calls dominating the tape today in VXXB land. Still got to get used to saying that. Looks like a bit of a vertical. The March 1st versus the March 22nd. So a bit of a vertical and a calendar because there's a time frame to that as well. In the weeklies, seeing about 8,000, 7,960 of that spread going up with the March 1st 38 halves going up for 20 cents. The March 22nd 41s going up for 58 cents, so a whopping 38 cents. They're both going up, both of these trades going up. Let's see, pretty much close to one of them on the bid, one of them close to the bids. It looks like maybe they. I don't know, this is a weird one as well. All this paper that's open, Mr. Rock Lobster, kind of weird right now. Did you expect to call Palooza out here in VXXB? And also even the paper that's trading today, this weird, actually not that far out of the money, but it seems farther out of the money. Do you like this weird calendar / vertical for 2.5 handles for 38 cents? It's just weird paper out here in VXX land right now. Maybe because the name's different. We got different people playing.
Yeah, you look at some of this stuff and like, well, are they rolling? I don't think there's enough volume even to roll some of that stuff. You have a diagonal trade. I guess they're looking to sell another call against it.
Well, it's definitely opening on. Yeah, it's opening on the March 1st 38 half leg. The other leg, I don't think so, maybe not.
So maybe they're just trying to sell more contracts. It is not a. All I could say is it is not a lot of paper with conviction, right? Unless that's just upside, we're just going to dump some calls and we're closing some calls. There is some chunks of put buying. It does look like so. Buying 4,500 of the 32.5 puts for today. That's probably a closing trade. But just looking at the other volume, some buyers of junk downside puts, like, into the trade, possible trade deal where you can pick up stuff. 30 is a possible low for VXXB, although I think it's because the trick with trading the vol products, did you know, is you really have to spend more time trying to figure out how much they can go down than how much they can go up. There you go. That's a free tip from the options from Volatility Views. So I think 30 by next week is theoretically possible. It would just be tough to do. But somebody's buying puts there anyway. So it is what it is? It's a lot of, I think people are just sort of testing, little tasty testers. That's what we got. Tasty testing options.
Tasty testing on the upside, apparently, which is at least the bias of the paper today is to the calls. The bias of the OI is to the calls. That's kind of interesting. Aside from the number one spot, which is puts, it's mostly calls out there, which is interesting. And again, a little bit different. I mean, for a while there in the initial blush of the early days of VXXB, which we are still very much in, by the way, we saw people kind of diving back into that same old paper, getting the near-term puts, and then they kind of didn't work out again. So maybe they got burned, in the legacy VXX, and then they got burned in the first few cycles of VXXB. Maybe they're finally keeping their powder dry on this one, Mr. Ryan. Maybe say, maybe there's something to this call thing. Maybe I should buy some.
Yes, well, you know what? There's nothing like buying calls in VXXB when you have almost $2 of contango in the options. But if you do have the trade war, like the trade thing is all of a sudden another $500 billion in tariffs. All all of a sudden, all that call buying is going to look pretty smart in VXXB. So, but that's what you have to, that's the little hurdle you have to get over at this particular point in time.
Well, we have to get her over. And since we're talking VXXB, might as well get to your questions as well with a little bit of the old volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail, the portion of the show where you guys take the reins. Mr. Rock Lobster, our question of the week, where we like to kick it off, is appropriately enough having to do with our old friend, or our new friend, really, our new flavor of friend, VXXB. We asked you guys, hey, VXX is dead. Long live VXXB. There's a bit of a new kid, not quite, but a bit of a new kid on the block. Are you guys out there trading it up yet in the options? If not, how are you getting your vol fix these days? Are you keeping with the mothership VIX? Are you staying away from VXXB, maybe going to a TVIX, another ETP, or maybe you just don't want to touch it because the spreads are too wide? Let us know your thoughts. Or are you jumping into VXXB with both feet? Mr. Rock Lobster, what do you think our audience is voting for, sir?
I think they're sticking with the mothership. They're sticking with VIX, although obviously, or I shouldn't say obviously, I would say VXXB is starting to look a little better. That would be me.
It is looking a little bit better, and 43% saying yes, they are jumping in. 32% saying no, they prefer VIX options. 14% saying they prefer other products like a TVIX, or 11% saying no, the spreads are too wide. But if this poll is any indication, this poll didn't seem to resonate with the large numbers that we usually do. So maybe VXXB hasn't really caught on with the masses. Yeah, I'm going to say that's probably what's going on.
Nobody's typing in the B.
Yeah, exactly. That's exactly what it is.
They're typing in VXX. They're getting all angry because it doesn't move anymore.
Yep, and they're just done
with it.
And
they're getting salty.
They're like, I can't find this anymore. My platform doesn't have it. It's been delisted. I'm out. I'm going
this
to
is total crap.
I'm going back to this thing I could type, which is VIX. At least that's still there. Yeah. And if I go to toss, I could trade it off the cash. So then I'm a happy person. It makes sense to me.
Exactly. Exactly. You know, look at how good we are at diagnosing these things. Yes. We should do a radio show on volatility month.
It's like we should, like someone should offer us money to talk about volatility, and that would be nice.
That would be really great. Like a really large brokerage firm.
Yes.
I think that would be nice.
That'd be nice.
It'd be great.
Or perhaps a large global exchange group. We'll also go that route. We're not picky.
Either one of those. Either one of those would work.
Either one, indeed. Speaking of your cues, it's funny, Mr. Rock Lobster, and I'm not saying Thomas falls into this camp, but I can usually tell when the SPY dividend is coming up, because that's, you know how I could tell? Because you start getting all those questions about, hey, my calls in SPY, what happened? That's usually where that email starts coming into our side. So I'm not saying Thomas is in that camp, but it's still kind of funny. So his email reminds me of those we usually get around SPY dividend time. And Thomas Weber's question is, he says, if I am short deep in the money call in SPY, and he puts in parentheses with a delta near 1, what are the odds I will be assigned the Thursday night before Friday expiration? All right, well, a couple of things you guys set aside. First off, if you're short these deep in the money calls, or effectively any in the money calls, on the actual expiration day, those calls will be assigned. They will be exercised. The auto exercise threshold is a penny now for pretty much everything over there in OCC. So the Friday, yeah, sure, 100%. Thursday is a different question, and I think that gets back to what we were talking about earlier. The time when you got to really worry about your SPY calls maybe getting taken away a little bit early is when you're talking about the dividend coming up. And Mr. Rock Lobster, how often do you encounter this? Because we seem to still encounter this quite frequently here. People forget that SPY has a dividend.
and it's a big one.
Yeah.
What is it? It's 2.5% a year or something? Like, it's not I mean, SPY definitely, you got that equity risk, but it's still, I mean, it's, if you just need to live on the dividend stream, it's not terrible. So what happens is, and I get this, I do a class, we have classes in our archives about dividend and exercise, but the thing that everybody has to realize is you have to close your contract the day before XD, right? Because when it's XD, it's too late. So everything with exercise has to be done the day before. So if the easy way to say is if the put on the other side of the market is worth less than the dividend, your odds of being assigned are generally 100%. So if you have an in-the-money SPY call that's 100 deltas, it's 100% on the day before XD. So you'll get the notice on Thursday night. So the only way that doesn't happen is if somebody screws up and doesn't exercise. They're in the money calls because it's still a manual exercise. It's not an automatic exercise the way they make the XD. Because if they would have made the XD on a Monday, that would have made it a lot easier, right? Because everybody would be automatically assigned.
How much easier would that be? You actually get the auto exercise to line up with the dividend. Why wouldn't they think of doing these types of things?
Right, and and you remember the stories of like the clerk that forgets to exercise 1,000 calls.
Well, there's an entire business that still exists. It's less, but that entire div play, all that is banking on people forgetting, right? That's the entirety of that trade. Pretty much for a while there, half, 3/4 of Philly's volume on the PhilX was all that. People banking on people forgetting to exercise their calls for the dividend. That was the entirety of their volume.
And it was no small amount of people.
No, it was many millions of contracts going up for this. So this is a business. It was a business unto itself. OCC finally cracking down on some of that. It's still not gone away. You can still do verticals and things, but they're trying to close that loophole because they realized it was just predatory to a lot of the retail out there who didn't know what was going on. Right. So I'm not saying Thomas is in that camp, but in general, yeah, Thomas, you're pretty safe on the Thursday unless it's, of course, ex-div time. Then it's pretty much going to get called away. So just bear that in mind. That's the only time really that people are going to come for calls early, right? Was when there's a dividend, and SPY has one. So as long as it's not dividend time, you're pretty safe. If it is, then but even still, Thursday versus Friday, you're talking one half a day, and then that call's going away. If you're short a deep in the money call on expiration, it's going away, and you're going to get short some deltas. So hopefully you have that factored into your equation. But on Thursday night, pretty much around the time of the old dividend. Let's see. This is the handle, Jelevis. Jelevis. I'm going to go with Jelevis. I like that. Question from Jelevis. Does it make sense to just get long ratio vertical put spreads in VXX as opposed to just buying the puts? Make the premium negligible so you don't get hurt if it spikes against you in the near term. If it drops, it will probably do so slowly so you have time to get out. Or you can just pick up VXX shears at a hopefully low strike price so further erosion will be limited. Then you can always just wheel out of those if the need arises. Thoughts, Vol Swammis. Is this the VXX silver bullet trade? All right, there's a lot here. Let's see if we got what he's putting down here. So he wants to buy, instead of buying straight up VXX puts, he wants to buy, he says, vertical ratio put spread. So I'm assuming he's buying one and selling two, or buying one and selling three farther out of the money. So yeah, he's probably doing that. And then he's saying if it probably the odds, like we were just talking about, the odds of a downside erosion crash are fairly low. So you have some time to adjust, but also you've mitigated your outlay so that if we see another 2018 come to pass where VXX is in rally ho mode, you haven't broken the bank either. And that's interesting. Obviously, you're going to have to tie up some capital with that strategy. So people always think, the premium's nothing. As the outlay is negligible. The cost of this trade is negligible. There's a margin cost to this. You're going to have to tie up capital for this, maybe more than you want. So bear that in mind. But Mr. Rock Lobster, he's calling us the Vol Swammis. Is this, as he says, as Jelevis says, do we finally have it? Is this the VXX silver bullet, sir? Is this what'd you say? This is how you trade the erosion while you hedge the explosion? There's no explosion hedge there, though. He needs like an upside call for the explosion hedge.
First off, since he called us Vol Swammis, I'm gonna give him a freebie. And I think we're just going to call him the Jelly Elvis. I know that's not how it looks, but we're just calling him the Jelly Elvis.
I'm down with that. I'm cool with that.
Jelly Elvis, okay. I think what you do is so let's just say, theoretically speaking, if one were to assume there'd be a certain amount of decay, and you buy 2 and sell 1 put for near even money, and you make sure that those 2 strikes are well within your proposed possible decay, then you could have a trade that would fit your profile. And if you do have an explosion, you just close a few of the short contracts and change the ratio. So if one were just guessing on that trade, you could, or just thinking out loud on how one would put it together.
So you like it biased the other way then. You like buying 2 or 3 and selling 1. That's how you like it.
Well, I mean, think of it right now. If the potential price, VXXB price with historical contango is 0 for the end of the year right now. Now, it's not going to get, the vol go up and down or whatever, so it'll never be that much. It potentially could be. But, if you were looking at, let's say, the 2022 strike or something like that, that could be well within that. Then you could pick up that extra put, and you might have a shot to close it if you have a vol event. If you do 1 by 2 in the long term, it's really hard. Number one, because it's a hard position to close because your landing is difficult. If you do it short term 1 by 2, that is possible. The problem is because there's inverse skew in VXX, you don't really get great prices for those 1 by 2. So if you look at like the March 15, right? And I know that VXX theoretically could be trading $29 is the likely price for VXX. So if you did the 31.29 1 by 2, 31.29 1 by 2 put spread would cost you 10 cents, right? That would cost you a 10-cent debit to buy 1 and sell 2 in the March 15 cycle. That's what theoretical with VIX staying where it is at right around 14.89 or something like that. But if VIX drops to 12, the actual potential low price for VXXB is more like 26. So your 1 by 2 would go below sky high. So it is a difficult trade to do it that way unless you're trying to price like a quick vol collapse in VXXB. So
I see what you're saying. I like it that way too. I just don't know if Jelly Elvis is going to be down with buying more. Yeah, he got to buy 2 now and sell. Right. He wanted to sell 2. He wanted to have his premium be nothing. That was his whole Jelly Elvis thing. Now you're raining on his parade, sir.
You can still buy 2 and sell 1 because of the inverse skew, and it works better in VXXB. So the thing is, nobody thinks, you're looking at a product that can move $20 in 6 months, let's say, or in 9 months. So you have to change. You've got to look at the broad move of the trade instead of just like a week-to-week trade. That's what they have to sort of get in their head.
I think a lot of people are still just fixated on that outlay number, right? That's all they want. They want to get that as close to 0 as possible. Therefore, it's a good trade. And some of the nuances like we're laying out here, maybe you get a little bit lost when they see that number it's so close to 0, Mr. Rock Lobster. How could it be bad?
Exactly. Like, I can't work. It's got to work. You're like, yeah, but you'll never be able to close it for money. That's the problem because you're doing a skew negative trade. Those puts that you sell, right, relative to the downside, they're going to blow up in value and you're hosed if VIX Cash actually drops a little bit. So I'll just say it's not my favorite type of trade when vol is this low. I don't like a ratio put spread when vol is at 0. It's just it's hard to close it to make money, right? Unless you nail the spot right into expiration, which is pretty tough.
Yeah, you gotta leg it and work it and babysit that, or maybe more than Jelly Elvis wants to. We'll see. I like that Jelly Elvis. I'm gonna have to go with that. I'm gonna have to use that.
Write us more questions.
I'm gonna have to use that as a screen name somewhere just for fun. I might have to borrow that. All right. Well, we have more questions, but we got to keep. We're already running along, listeners. So let's keep going into our final segment. It is time to embarrass ourselves in the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the Crystal Ball, the portion of the show where we try to wrestle the slippery pig that is VIX. Not always successfully. Recently, it has been pretty good, but then some good bullseyes popping off between myself and the meatball scamming in there every now and then as well to get a... He got one bullseye, I think, recently, so he was very proud of himself. I have so many I've lost track. I don't keep track of them. He probably should, though, because it would be a good thing. But I think some listeners have written into us with some record keeping in the past. We'll have to do more of that. But coming into this week, of course, VIX Cash pretty much on from the beginning of the show, still right around that 15 handle, which means the meatball was about 1 1/4 handles away. He was 16 1/4. I was 2 1/4 handles. I was 17 1/4. So not quite the bullseye for either of us this week. But Mr. Rock Lobster, I shall be charitable, since I was a handle farther away than your person who's your doppelganger in every way, clearly, the meatball. I shall allow you to go first. What are you feeling for next week, sir?
So there wasn't a lot of bullseye in last week's, but there's a lot of bull in last week's. There
was a lot of bull. He's been fading aggressively forever. He didn't this past week. He didn't, and that's what cost him.
Yeah, I'm going to say 14.25.
Sticking with our quarter theme, huh? Just going a handle or so lower.
Yeah,
I can see that.
Like 14.25 reasonable. Like it's still trade war, good, bad, trade war, trade. It's all trade war anyway. So I'll just go with the fact that if Munchin is out there saying it's good, he's usually the most reliable guy in the whole place. So we're going to go with him. Let's go with the Goldman guy.
We've got Munchin and Jelevis on the show today. So everyone's got a good name today. Yeah, I was feeling a little bit, and it has been working for a while, a little bit of that, stickiness because of the trade war. Now we saw some of that come to pass. Usually what's happened is we saw, the vol come in the beginning of the week, and then it spikes back up towards the end of the week because the other shoe drops. Wait a minute, the trade war isn't as close as we thought, and the vol comes back up. And that trade has kind of been working for me here. This week, not so much. So maybe I need to adjust myself a wee bit lower. I'm feeling lower, too. I'm not sure if I'm feeling quite... There's always that other shoe, Mr. Rock Lobster.
Don't 14.23 me.
No, I'm not. Don't worry. I'm not.
You're gonna scum me.
I'm not anywhere near. Who do you think I'm talking to? You think you're talking to the meatball here? Of course not. He would do something like that. Yes, without a moment's hesitation. Me, not so much. I'm still liking a little bit north, but I'm going to say not quite as north as I was last week. I'm going to say we're going to get a little bit of lift towards the end of next week. We might sell off to your level. We might flirt with it in the beginning of the week, have a bit of a dalliance. But at the end of the day, they're marrying where I am, right around 15.5. That's what I'm saying. So we got 14 1/4 for the meatball on the downside, even though he was fearing me at 14.23. I would not do such a thing. I instead shall bring us to 15.5. All right, that's going to do it for the crystal ball. It's also going to do it for this episode of Volatility Views. Man, we've been gassing on for a while here, Mr. Rock Lobster. It's fun to talk vol, isn't it?
It is a real whiz banger. You think people are going to listen to the whole show? Was there good Mixler action?
Oh yeah, people listen.
I mean, we got Jelly Elvis, we got Munchin, we got VXXB confusion. I mean, that's a show.
What more do people need in their volatility lives? Hopefully we kept you sated for at least one more week.
And we gave them decay. We gave them all kinds of stuff, man.
All kinds of nuggets in there for you guys to enjoy, and mine at your leisure. But before we go, Mr. Rock Lobster, people want to learn more. Maybe they want to have. Maybe they're. What was the guy's name? The other guy, Weber. He wanted to know about. Maybe he wants to learn about SPY expiration. Maybe he wants to learn about all this VXXB stuff we're talking about. Where should they go? What should they do, sir?
Well, they can go over to Option Pit and just become a gold member. You will get more option education in a year being a gold member, or in 4 months, than you will anywhere else on the planet. So we got an archive of, 500 videos. You would learn so much, your head will spin. Most people, we melt their minds, but that's okay. They come back for more. Also, we are going to do a long-term option trading masterclass, although I don't say it as good as you, March 5th, about how to trade, basically how to increase your return, lower your risk, looking at options for long-term equity investors. A great class. I've taught parts of this class for the last 7 years, and now we're going to put it all together in one. Can you say it for me, Mark, to really get our listeners excited?
The masterclass.
Yes, in one masterclass. There you go.
There you go. Check it out. Optionpit.com. To learn more. And on behalf of the Rock Lobster and myself, I thank all of you out there for downloading, streaming, subscribing, all the fun stuff that you guys do, asking questions, playing along in our polls, sending in crazy questions with good handles. Keep them all coming. And we'll see you next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.